GameStop stock erupted like a volcano just the other week. What just happened? Who was involved? And the big question is it a bubble? This is not going to be an hour-long video in which I will discuss each bit of the whole process of in detail, but I'll just pinpoint the most important highlights that was important to make something like this happen. My name is Lukas and I'm from xlwealth.com. If you haven't hit that subscribe button here, you gotta do that very soon and become an XL crew member of this growing channel that we have together here on YouTube. Okay, first things first. Reddit. Most of us will most likely know this website, and like you, there are about 430 million active users on Reddit. Now, of those users, there is a group of investors who follow a popular Reddit page called the Wall Street Bets. And what they did on this page is they made this GameStop stock grow for about 1900% of growth compared to what the value was, just at the beginning of this month of January. Just within 1 month time. You gotta think about that, 1900%. The next question is, why GameStop? Well, you gotta see it like this. The Reddit page, Wall Street Bets, is full of investors who are looking to play an interesting game on the stock market. In most cases, you have professional investors. And of course, on the other end, we've got the amateur investors. When we're talking about two parties, those are the main two parties there are. Amateurs versus the professional. Now, coming back to GameStop, the company is expected to lose money this year and even the next. Sales are being sluggish because gamers do not longer need to go to stores to buy their actual games and consoles. And that's sad that some investors actually have argued that GameStop was seriously undervalued because, especially in this time, video games have become staples of the stay-at-home pandemic era. The company actually announced just a couple of weeks ago that it had added 3 new directors to its board. Now, the most important change was the digital experience of one of those directors, something GameStop desperately needed. As the video games go digital and stores become kind of irrelevant, GameStop's stock actually rose a little of 12% that particular day. But this wasn't a normal stock surge. 2 days later, it rose with another 57%. Day after that, another 27%. Following week, it rose 10% twice in that week and another 50% a day. And these numbers are just mind-babbling, dizzling. There are two sides to this story. The silly part is it has hardly anything to do with the company's foundation. Now, the first part is the investor group following this Reddit page bought a ton of GameStop options. And the second part is that the short sellers had to buy shares to cover for the losing bids. Just to give you in perspective, last year, GameStop share was selling for about $5 per share. Currently, you can buy them for almost $325 per share. Why is this happening now? Now, that is actually a very simple question to answer. The way we trade has changed throughout the years, especially with the rise of no-fee apps. This technology has given the amateur investor so many possibilities right now that everybody can join the boat the moment they want to. Now, it has become so easy nowadays that you don't need to have all those difficult procedures to buy options and stocks. Now, the interesting thing is this. You could pay an analyst to tell you what stocks to buy, or you could just create a Reddit account and follow a forum like the Wall Street Bets. And yes, that's what millions of young people are doing right now. And this is partly why the sudden rise in GameStop stock, it's a difficult word, has actually caught Wall Street's professional investors by surprise. They weren't expecting this. And before I go into the last question, let me just quickly explain the whole term of option, because you gotta see it like this. Options are bets investors place in a certain stock, allowing them to buy a call option or to sell a put option at a particular price. Now, that allows people to wager on whether the stock will rise or even fall. Investors can place rather cheap option bets and sell those options as they rise in value when the stock prices gets closer to their wager. Although buying and selling options isn't the same as buying and selling stocks, big option volumes can drive up a stock or down, typically because option traders buy or sell the stock itself as a hedge. In the case of GameStop, targeted by the Wall Street Bets, traders keep buying options, and this forced the investors to sell those options to their bets by buying up GameStop stock. Is this all a bubble? The answer is so obvious. It is absolutely a bubble. There is an argument that GameStop was undervalued. And same goes for the ideas shared on the Reddit page to Wall Street Bets. Reality has to set in. And that is the problem with bubbles. If you get out too early, you'll lose the chance to cash out on top. And if you stay in too long, just sink along with the boat that you were on. Now, yes, I get it. You can pay off your student loan all of a sudden, just like that. Let me ask you this. GameStop bubble, will it keep on growing until it can't grow anymore? They're going to burst at some point. I thank you for watching today's video. If you liked the video, don't forget to smash that like button. And of course, if you haven't become that XL crew member yet, be sure to hit that subscribe button. I wish you happy investing, and I'll see you on the next video. Bye-bye.